be honest with you, you only need to know two candlesticks. These candlesticks basically make you understand what the market is about to do before it actually happens. So these two candlesticks are called the engulfing candlestick and the wick rejection candlestick, also known as the Doji candlestick. Now in this video, I'm going to be showing you guys these two candlesticks, and I'm also going to show you guys how to use them, right? So without further ado, let me go on and show you. Okay, just like I explained earlier on, you basically need two. So the first one is the engulfing pattern, right? So this engulfing pattern is very easy. What does engulfing mean? Engulfing basically means covering, right? So for example, let's say for example, you know Adidas, everyone knows Adidas, right? Basically, as you can see, it starts off with a small line, and then there's a bigger line, and then there's a other bigger line. That's basically engulfing, right? All of them. So that's basically engulfing. So as you can see here, this engulfing pattern, right? This is a bullish engulfing and this is a bearish engulfing. Now the word bullish, just like I explained in the previous video, basically comes from the word the bulls, and then the word bearish comes from the word bear, and that's why it's basically bearish, right? And it is all because of the way they fight. Okay, so now this bullish candlestick means that buyers have basically entered, right? So as you can see, it number one, it's a sign that there might be a chance of a potential reversal, and then number two, it's also a sign that buyers have stepped in and this is the right time to buy, right? Okay, now for the bearish candlestick, right, it's exactly the same thing. The only difference that now we are selling, right? A bearish candlestick lets us know that, okay, once you see the bearish engulfing candlestick, you know that, okay, there's a potential reversal. As you can see here, we had a push right to the upside, buyers were in control, and then once we saw this huge red candlestick, there was a reversal. So it's also a reversal pattern, and it's also a sign for you to know that, okay, sellers are still going to be in control, right, and are about to enter the market, right? So now that you guys basically understand that, I want to show you guys the rejection candlestick, right? Okay, now let's talk about the rejections, right? And this is why the rejections are important. The rejections basically let us know that, okay, we are no longer going in a certain direction, right? So for example, let me give you an example, right? If you look here, the first one, right, the price moved up, right? Buyers were in control, then price was moving up. Remember, I told you that the wick is just a trail, right? It is just like your foot trail. Whenever you're walking in a mud, you obviously leave some foot trails there. That's the same thing with the wick. So the market went all the way up here, and once it came all the way up here, what happened? Sellers pushed the price down. So when sellers pushed the price down, it came down and closed here, right? So this is a sign that, okay, we are no longer bullish, but there is a slight potential that we might get a reversal, right? So once you get this reversal pattern, what you should be expecting to see is this engulfing candlestick confirming that, yes, this is a full reversal. This is a time for you to like reverse, right? So for instance, this is time for you to basically enter for a sell, right? So this is very vital because it will really help you. So for instance, let's say you want to sell, right, on a lower high. So it's a lower high, and then once you see this pattern at this point, you can know that, okay, this is the perfect time for you to sell for a potential lower low, right? So now let me explain the uptrend, the bullish one, right? Let's say for example, as you can see, the price moved down, right? As it was moving down, it created a bearish candlestick. But what happened, just like I explained, it's a trail, so buyers pushed price up, back up, and created this bullish candlestick, right? Wick rejection, right? So now, why is this important? This shows us basically that sellers were in control, and then buyers pushed price up. Now, to confirm the full reversal, you can see that here we have this huge engulfing candlestick confirming that, okay, we are no more bearish and we are now bullish, right? And this is a perfect time for you to enter for the trade. So let's say for example, you were entered, this was a uptrend, right? Created a higher high, created a higher low, created a higher high, and then you created a higher low. What you basically do is that you'd wait for this pattern to happen here, and then once it happens, you can basically enter for buys, and then boom. You understand? That's basically how it is, right? So in the next video, I'm going to be showing you guys how to actually mark up your support and resistance to actually enter the trades, right? So without further ado, let me close the video and see you in the next video.